The Nigerian Naira was introduced on January the 1st, 1973, replacing the Nigerian pound at a rate of 2 Naira to 1 pound. 48 years later, it is now 560 Naira to 1 pound. The Naira stands at 1 Naira to about $413, or rather $1, I beg your pardon, to about 413 Naira. Now, these rates can vary depending on who you ask. Over the past few decades, Nigeria has seen a decline in the value of the Naira. There have been several attempts to stabilize the currency, and some have been slightly successful and others not so much. It is not news that Nigeria is experiencing a forex crisis, and this is causing more pain for many in Africa's largest economy. In early August, the Central Bank of Nigeria Governor Godwin Emefiele announced a ban on Bureau de Change (BDC) operations in Nigeria. And that is to say, the CBN would no longer be selling foreign currency to them. And the entry of the BDCs into the Nigerian financial system in 1989 was to broaden the foreign exchange markets and improve access to foreign currencies due to challenges encountered by commercial banks in offering such services. But now, Emefiele has said banks have been given instructions to meet every legitimate demand for foreign exchange and that the CBN will be ready to support requests that are above the allowed limit, provided they are lawful. Financial analysts have argued that the CBN's ban on the BDCs has contributed to the Naira's unprecedented fall. In May, the CBN took a major step towards full exchange rate unification after uploading the more market-reflective NAFEX rate of 410 Naira 25 kobo per US dollar on its website. A full unification entails closing the gap between the sole official rate and the parallel market rate. How can Nigeria's Apex Bank save the Naira from this freefall? I'm Tolulope Adeleru Balogun. Welcome. This is Business Edge. Joining me on today's show is the chief economist for Streetnomics, Gospel Obele. Gospel, good morning and welcome once again to Business Edge.
Good morning. Thank you for having me.
Let's start with a bit of a background and foundation for this conversation. So the Naira has struggled from a few years after its introduction. And so let's briefly lay out some of the struggles the Naira has had over the past several years. Why has Nigeria's currency had such a hard time over the past few decades?
All right. Thank you for having me once again. Yes, the Nigerian currency has had a hard time over the years, primarily because the currency, to a very large extent, is a function of the level of productivity in that economy, as it were. So if you also look at the productivity of a Nigerian economy since independence, it has declined significantly. All right. And then productivity is also reflective of how much of structured business activities and exposure to markets, all right, and that we're positioning the local economy to earn foreign receipts, all right. So we've strongly declined in terms of productivity, and that has also impacted on our capacity to earn foreign receipts from diversified sources in the sense, all right. So that poor level of economic mismanagement, that poor level of economic management, as well as poor productivity in the sense, have impacted on the currency decline ever since the Naira was introduced. So it's a function of poor productivity and poor economic management to a large extent.
Okay, so one of the major issues the CBN has faced over the years has also been addressing the various exchange rates and windows that are available in Nigeria. What impact do you think these different rates and windows have had on the local economy, as well as on investor confidence and even investment into the country?
All right, to a very large extent, we'll see that there has been a culture around not dealing with the core of the problem. And thereby, you're also putting other layers of solutions to patch the problem. And by doing that, you're creating more problems, all right? The reasons why we had more windows in the first place was because FX demand began to increase as population, the middle class, and aspirations increased. FX demand increased, all right? And because the central bank could not meet the demand of everybody from the official window only, they had to start tailoring, all right, needs to different windows, as well as also speaking to the fact that there has been a supply issue FX, foreign exchange, and foreign receipts. All right, so that's the major reason why you had different windows trying to serve different economic agents. Now, what has happened is that we've realized that over time it has not been efficient enough. All right, because those solutions created their own problems. We brought about hedging, exchange rates, all right, arbitrage, round tripping, and all those interesting but very, very, very severe issues as it were. All right, so all of these dynamics have led to a lot of loss of investors' confidence because we've seen that monetary policies or financial development policies have not been done properly over the years. They've not been rolled out intelligently. Yes, knowing fully well that the Nigerian economy is very much complex, and as well as the fiscal policy support side of things is not in place. So the central bank is in a place where they are in a fix, trying to manage a currency that's a function whose value is a function of many other structural issues that pertains to the fiscal side as well. So investors have lost confidence because they've seen the poor management of currencies, as well as seen the poor management on the fiscal side around enabling for growth and productivity as it were. So these are contributing factors that has led to the fall of investors' confidence when it comes to investing in Nigeria and the value of the currency they've been investing in.
All right, so let's talk about the maybe controversial is too much of a term until recent times, but the ever interesting situation with Nigeria and the Bureau de Change operators. They have a long history here, over 30 years that the BDCs have been in operation, and they were introduced to sort of bridge a gap as we've seen them continue to do up to recently. Many saw it as a temporary measure, but it became a permanent situation. How did Nigeria get the BDC situation wrong? Even though it's a very rare situation where you see BDCs almost outside of an international airport, or you see it just you can walk on the street somewhere, go to a hotel and change Naira here and change dollar or any other currency here in Nigeria. It's not the regular thing you find in other developing or developed economies. So where did we go wrong with the BDC situation?
So I'd like to state here that going wrong on all of these things have been a function of culture. For my own research, I know that similarly to an extent, it's a function of culture. So there are so many leakages in the Nigerian economy. And when you have that much of leakages, regardless of if you're in the fiscal side, monetary policy side, or in the public expenditure side, even the government side, you realize that these leakages would always amplify over the years. So we didn't do the main homework of getting our currency management and sourcing supply right. We broke into other windows, and one of the major challenges from that was the introduction of the parallel market. All right, so the CBN gave a license to some BDCs to manage for that demand, but realized that because there's significant leakages in the monetary system, many other BDCs who were not even licensed or who were even funded by people in the system, quote unquote, all right, began to rise. All right, right now we have about almost 6,000 bureau de change operators in the country, and that's very unhealthy. A significant chunk of them are either informal or semi-formal in the sense. So we went wrong from the point of not being able to manage the currency and from a productivity angle, first of all. Secondly, underestimating the impact of leakages over time as demand for that currency increases. All right, so and even up to now, we're not dealing or closing leakages. We're trying to use policies, all right, to patch those leakages. So it's really going to get worse if we don't deal with the structural fact that there are leakages in the Nigerian monetary policy system.
All right, so Gospel, before we go for a break, the CBN said that the ban on the sale of foreign exchange to the BDCs was necessary. As you talked about the leakages, they talked about the fact that more of them have been conduits for illicit Forex flows and graft. Exactly. But they're also the regulator in this particular industry. And you said 6,000 of them. They also said they're no longer giving any licenses and they'll be reviewing licenses. So what has been the CBN's role in actually regulating this, the BDCs? You are the regulator. You're also the one who sells, not to all of them, but you sell to the majority of them. So isn't that also an indictment on the CBN's regulatory and oversight ability when it comes to these leakages that you've mentioned and what they've called graft and illicit Forex flows?
Yes, to a very large extent. All right. And we see that also playing out in the crypto space. So crypto in itself is not bad, but because of the fundamental structural issues around monetary policy and financial systems development, we see that people have gained sort of, in quote, gained the system, and there've been a huge capital illicit inflow risk. all right, around the crypto market when it comes to the Nigerian economy. And that also poses some national security risk and concerns. So if you look at the position of the CBN, quite honestly, they have some sense around what they're trying to, however the intention, right, however the humanity, and if not misaligned with what the intentions are seeking to achieve, all right? And then again, it's also disregarding the fact that there are regulatory challenges even within the same system, all right? It's some form of training capacity, right? Professionals not wanting to look themselves in the eye and tell themselves, see, there are better ways to do what I'm doing, and I need to take more responsibility for that. So that is in place, all right? And then we're trying to use policies as well, like I mentioned earlier on, to patch the situation. So a lot of BDCs are regulated by their own associations, all right? And you'll find out that the central bank does not even have a lot of control around what happens in that market. So trying to shut out the BDCs, in my own opinion, is a bit too early. And there has to be more or less like a staged approach to handling that, because whether you like it or not,
Gospel,
the parallel market is...
I think you're getting into my next question, which will come up after the break, which is whether or not there's a compromise in this situation to be found. Because the CBN is saying go to the banks, but we already see complaints coming from customers. So we'll pick up this thread of the conversation after the break. Is there a compromise to be found between the CBN and the BDCs? How do you save the Naira from this continuous fall? And what happens with the Naira? We touched base with that just right before the launch, and we have an update on that for you. You're watching Business Edge. Don't go away. Now, still with me is the chief economist for Streetnomics, Gospel Obele, and we're looking at how to save Nigeria's Naira. So, Gospel, just before the break, you were getting into a possible compromise, and that's the way I'll put the question to you. We've seen complaints from Nigerian customers on how speedily and readily the banks are in attending to their Forex needs. And if you remember, in 1989, the BDCs came in to bridge this gap. Is there a compromise to be found in the operations of the BDC, the regulatory situation that Nigeria finds itself, and even making sure that business owners, people going to school who have legitimate needs for Forex are able to get it as and when due?
So that's the irony around the story. It's quite unfortunate that the alternatives are available large on the inefficiencies of the formal structure. And then again, we clamor, as an economy, we clamor so hard and so much for formalization of the economy to a large extent, but then again, it's not efficient. So yes, there are concerns around that, and they are very valid concerns. First of all, when you channel foreign exchange through the commercial banks themselves are, on the first place, very, very limited in capacity to serve demand. All right. Second, there's already a supply issue. When you look at the only way demand, and I hear a lot of people talk about allowing the leaving the Naira to market forces. One of the reasons why that's a bit risky is that you can only leave something to market forces, all right, when the demand and supply side really makes sense in a sense. But now there is a supply issue, all right, and the central banks, the commercial banks are also caught in that technical bit of the challenge. Secondly, there are internal controls challenges, all right? You'll find out that there are different FX policies even among commercial banks. There's no form of consistency and alignment, all right? Thirdly, there is a challenge of what you call legitimate needs, all right? So what you term as legitimate, a lot of times, the commercial banks don't even understand the needs of people when it comes to accessing Forex and using Forex in a sense. So they may, at some point, turn down some needs that seem to be legitimate, that doesn't sound legitimate according to their own meaning, as it were. So that would create another form of artificial scarcity for the dollar, and as well as intensify efforts in the parallel market. So in as much as only central banks can sell to BDCs, but then again, even legitimate needs cannot be fully met, we'll find a situation where BDCs will increase the price of the exchange rate between Naira and the dollar because it's hard for them to access, as well as the growing market demand as a result of banks not being able to meet appropriately. So the central bank has underestimated the market demand, the legitimate market demand needs for Forex. And there has to be a lot of internal control issue internal control alignment. There has to be a lot of fixing the supply end of that market before you can even think of taking the bill change out.
And it's interesting you talk about the forces of floating and supply and demand, because I'll get to that in just a bit. But let's look at this fall we've seen for the Naira in the past few weeks. It has been, I won't necessarily say unprecedented, but in recent times, yes, we have not seen the Naira fall to such a low value against the leading foreign currencies. Do you think this is directly linked to the ban on giving forex or selling forex to the BDCs, or again, it's accumulation and a combination of a number of things, with that last action being the straw that broke the figurative camel's back in this situation?
Yes, it's the latter. It's the latter because coming from June, 2018 or thereabouts, the central bank has started restricting forex to some particular items. There was a 44-item list on restrictions and all of that. There were also new regulations around BTA and PTAs. There were closures of the borders, and all of those dynamics. And more recently in February, the ban of cryptocurrency. What has happened over the years has been a situation where people have resorted to other streams like cryptocurrency and the likes to manage for the shortfall of supply in the foreign exchange market. So you ban crypto, it means that those people have to fall back to looking for dollars to facilitate. So all of those things intensify demand. And it's simple law of economics. When the demand of an item is more than the supply of it, the price will increase. And the price here, we're talking about the exchange rates. And further down into the year, we saw the BDC policy and a few other policies around banning some particular fintech. So the central bank has positioned itself as more of a monopolistic institution than an enabler of financial inclusion or financial system development. And that's quite worrisome for foreign investors, and it's quite unhealthy for the positioning of the currency. So even if Nigeria starts fixing infrastructure challenges now, those things take time before they yield results. So we're going to be in this mess for a long time until the CBN begins to rework policy solutions, in complementary state with the fiscal policy, that's the federal government and all that, to ensure that the bane of the currency failure is being fixed, which is productivity and empowering businesses to access new markets in terms of exports. So even at the level of its devaluation and all that, we're not even maximizing it because our exports are assumed to be cheaper because the value of the Naira. We don't even have an organized export committee, in terms of positioning to scale gains receipts, foreign receipts from exports. So it's a bit a very worrisome challenge that are very much interconnected across other variables.
Okay, so you had mentioned basically your personal thoughts in terms of when it comes to those who say, let the Naira find its natural value or its natural level when it comes to the dynamics of demand and supply. It was in 2019, CBN governor said that a flexible exchange rate would not favor the poor. I am committed to protecting the Naira. We cannot allow the Naira to float freely. In March 2020, we saw the CBN devalued or adjusted the Naira from about 305 Naira to $1 to 360 Naira to $1 on the official market. And the CBN has been under pressure from institutions like the IMF for many, many years to float the Naira and let it find its value. I just want you to expatiate a bit on that. What is the issue with floating the Naira and letting it find its natural value based on the demand and supply?
All right, so when you float a currency and let it find its natural value, it means that you're leaving it open to market forces, leaving it to people's demand for that currency, and you'll be able to supply that currency or make it available to them. Now, when you have that, technically by layman economics, basic economics, that's the right thing to do. That way, the Naira can find its value in the course of things, amidst market forces. And when that happens, we can get to know the real value. Because even right now at 600, that's not the real value of the Naira. It's worse off than that. So if you allow it float, we get to see the real value of the Naira. And when that happens, the economy is going to be really worse off for it, to be honest, in as much as it's the right thing to do. But then again, are we asking ourselves deeper questions around what other absorbers, can we introduce to curtail that shock or the effect of the common man? It's interesting to know that anytime the Naira worsens, the cost of living rises,
yes.
And once the cost of living rises, it intensifies on the poverty trap that means many more Nigerians cannot aspire for bigger things. Incomes will continually shrink, and the middle class will be wiped out completely. All right. So yes, it's sort of the right thing to do, but then again, the fears are around the market demand far outweighs the market supply. So there is no way market forces will be for our favor. Then again, do not forget that the currency will now be exposed to global risk. And in the face of that, it's vulnerable vis-a-vis many other currencies of the world, even to the cedis, to the Ghanaian cedis, even to the Kenyan shilling. It's getting vulnerable on a daily basis. So the forces for and the conversation around global supply, all right, and all that would position floating in such a way that it will hamper the economy more than help the economy. But that seemingly seems like the right thing to do, because managing it this way would lead to some form of crisis and agitations. And until we are ready to face the big elephant in the room, then we've not started yet. So it's not a matter of if, it's a matter of when at the end of the day.
All right, Gospel, I feel like there's going to have to be... I feel like there's going to have to be a part 2 of this conversation, because now we're getting into the saving part. So definitely, I know you're going to make it a date with us on Business Edge as we pick up this part. It's very important to lay the foundations and understand the fundamentals of these currency conversations before we get into the saving parts. Gospel Obele, as always, a pleasure. Thank you so much for joining me on Business Edge.
Thank you for having me as well. Thank you.
All right. And as I said, there's going to have to be a part 2 of this, because there's much more involved in keeping the currency of Africa's largest economy stable, and of course, putting it at a value and a rate that can be of use to the economy. Now, I did mention that I would touch base on the Naira with Gospel. Unfortunately, I couldn't, but we can give you an update. Now, the day before the Naira is supposed to launch on October the 1st, the CBN announced that it was suspending the launch of Nigeria's first central bank digital currency. There was a lawsuit involved as well, but they went to the courts, and the federal court had given the CBN approval to use the term Naira. As of now, we're not sure when the CBN will launch the Naira, but we'll keep you up to date with developments around it. You're watching Business Edge. When we come back, NC4 to Watch lets you know a few stories that you need to keep your eyes on. And top of the agenda is one of the biggest stories right now on the international business scene, and that has to do with the Pandora Papers. Now, a new global investigation exposing the offshore hideaways of some of the world's most powerful personalities is launching after 2 years of discreet work by investigative journalists around the world. The project, known as the Pandora Papers, is facilitated by the International Consortium of Investigative Journalists, which obtained a trove of 11.9 million confidential files. The reporting, which is still ongoing, involves more than 600 journalists from 150 news organizations around the world. Nigeria has been ranked 82nd among 110 countries in the world, according to the Digital Quality of Life Index 2021. This global study is conducted by cybersecurity firm Surfshark. Now, the survey is in its 3rd yearly edition, and the DQL ranks also placed Nigeria 107th in the internet affordability in the world, indicating that the country's affordability is 90% worse than the global average. Unilever Tea Kenya Limited's board of directors has approved the separation of its tea business following a decision by its parent firm Unilever Group to separate its global tea business, including tea plantations. Now, subject to regulatory approvals, the Kenyan tea business will be transferred to a foreign, newly incorporated tea company called Unilever Tea Holdco UK Limited. The company says the idea is to create a dedicated tea group within the Unilever Group. And finally, Zimbabwe's central bank has revised its year-end inflation outlook for a 3rd time to as high as 53%, citing the governor of the Reserve Bank of Zimbabwe. A rise in global commodity prices, a planned increase in power tariffs, and a weakening of the local currency against the US dollar on the black market were cited as inflationary factors. Annual inflation rose in September to 51.55%, the first increase in 8 months. And that's today's show. If you've missed any of our conversations on the big economic, financial, and business stories coming from here on the continent, head to our YouTube channel and make sure you subscribe. Download our mobile app and you can take us with you wherever you go. And of course, follow us on all of our social media platforms. We are at News Central TV. Monday through Friday, 11 a.m. West African time, we talk African business right here on Business Edge. I'm Tolu Lokwe Adelaru Balogun. Have a good one.